risk, he says. So it's game on for 2020, at least for right now, right?
We think so. I want to say that there's two ways of looking at the market right now, right? Up 40% over last year, or are stocks just emerging from a 2-year global bear market? We like to take that view that things are just getting started here.
How do you constitute the bear market? Are you saying 10%? Are you saying GDP? How are you really looking at it?
So from January 2018, right, global stocks peaked, MSCI equity peaked.
Right.
You had the fourth quarter of 2018 where about 3/4 of the S&P went down 20%. So global stocks already peaked way early in the year, and you had a majority of the S&P down 20%. That's good enough in our book to say that it was a fast bear market, but
right.
It was a bear market.
But a quick one. So breaking out of a 2-year bear market. So that's an exciting prospect if that's how we're going to look at it. That's a very much a glass half full mantra. And so when you're doing that, you liking things like semis, biotechs, and banks.
Yes. So what's driving this new leg higher here? Semiconductors, you just said, biotech, banks are outperforming REITs and utilities. That's
we got some great
risk.
calls on the banks today. I mean, Citigroup and Goldman getting some really positive comments today.
Absolutely. And then if you go further out on the risk spectrum, Chinese internet, Alibaba, JD, Baidu, those stocks are starting to work again. And then perhaps the most risky of them all, European banks. Some signs of a bottom forming here. We think that if those can continue to work, that is the best signal on risk appetite.
Okay, so let's start with, because these are some of your picks that you like. Baidu you mentioned.
Right.
Why Baidu out of all those Chinese stocks?
Well, so Bob has had a great run. We think it's a pinch stretch here. You still want to buy a pullback there. And so we go down and say, okay, well, what hasn't worked? What's starting to move? Baidu's there. Even a JD, a NetEase,
right.
Weibo, Sina, all these names in the Chinese internet that went through a pretty extensive decline in 2018. So we like that Baidu's had that early signs of a bottom. We think there's still time to get involved.
And also just the fact that we have now a better relationship, right? Phase 1 is being signed, phase 2 is coming. That also probably helps.
It should help. I would guess the mark's moving on from there, but
right, things are going in the right way. What about Deutsche Bank? I almost cringed when that was your bank pick. You know what I mean? It's not that Deutsche Bank isn't a great company, but it's one that has certainly been beaten down. It's had some rough headlines, a lot of layoffs, a tough environment over the last couple of years. But Deutsche Bank is one that's on your radar.
So it comes down to one word, and that's sentiment. Deutsche Bank is one of the most, if not the most hated stock in the world. I believe it has 16 or 17 analyst sell ratings on it, 0 buys for obviously it's been good reason. But we think that's an extreme. Stock has been beaten down enough. Its peers are going up around Europe, so we like that. I love
looking at this, actually, at all those, right? Barclays, and we're looking at some of the other ones, right? Credit Suisse, UBS. I love looking at we don't really focus on European bank stocks that much. We were at a time, but we took a step away.
Yeah, I think there's opportunity there for there to be a trade over the next quarter or two. They may not be these durable leaders over the next few years like a JP Morgan, but if you're looking for a pop here over the next few months, we think that that's an opportunity to play.
Yeah. What about a name like Salesforce? You said breaking out and we love it.
Right. So what's on the playing field here? Chinese internet, European banks. Software actually took the back half of 2019 off, and when it's more the semiconductor space.
The chips
now,
did well.
Yeah, the chips were great, and you had Adobe and Salesforce basically range bound for 6 to 8 months. Earlier this week, Salesforce broke out decisively. It's followed through the last few days.
Yeah, what a great chart.
We think this is another one that's just getting moving here. Can it pull back in the very, very near term? Of course. But structurally speaking, it was just phenomenal. Right.
And last but not least, I saw Amazon on the list. And you actually brought it to my attention that it hasn't hit an all-time high since 2018, since September of 2018. Because when I was looking at the chart, I was like, oh, well, there's a high in July, but that was a 52-week high. The real high was back in 2018. I mean, what's going on there?
We're thinking big stocks, significant stocks that have not moved yet, along with the broader market. Amazon is candidate number one. Significant weight in discretionary, significant weight in the market. Some signs that it's starting to come back to life here. 1800's a big level. I'm a little more skeptical if it can't hold there. But if you are looking for a 2020 major breakout candidate, keep Amazon on the radar.
Yeah, and you know what? We're talking to Tuna Amobi, a great analyst, later in the show, who has a 1950 price target on Amazon. So if anybody's interested in Amazon, make sure you keep it here throughout the hour. The other part that I was watching were some of these IPOs, right?
Yes.
So you had those on your radar. You call them the flame outs. I didn't know if they were lame out, like the lame part is out, and now maybe they're good for getting into them.
So last year was a rough year, especially once Uber IPO'd. A lot of these names tanked. Very subtle signs that they're bottoming. Uber, Slack, Pinterest, Chewy, all these names that IPO'd to big hype and just fell flat in terms of performance. Very subtle signs that they're bottoming out now, and I think they're worth a shot here. Keep a tight stop at their recent lows.
Well, it takes some time to find the right valuation for these things, right? I mean, are you the kind of guy who gets in on the IPOs early, or do you sort of wait it out 12 months?
Me personally, I don't have that ability. I'm not good enough for that.
Right, but I mean, you know, someone like Warren Buffett says, I don't even bother with IPOs.
Yeah, I wonder if it just takes time for the market to really figure out what's going on with these names, and clearly it was disappointed last year, and now there's, as you see, this pro-risk development. I wonder if that's the next group to get involved here.
Give me 10 seconds on the transports. That's something you're watching.
Yeah, industrials broadly have broken out. Transport's the one group that hasn't. I would watch them too for another leg up here.